the big corporations have been able to hold this increase in inputs back because they're big corporations, but there will come a moment where they won't be able to hold back these input prices, and they're going to have to pass it on to us. And I think that could happen very soon. Friday, October 22nd, 2021, Monaco 64, home of alternative economics and contrarian views. Recently, I was approached by a new YouTube channel creator called Adam. His YouTube channel is Economic Research. They're based out of Manchester in England, and it's encouraging to see other people here in the UK, and especially younger people, be interested in alternative economic views like I have been for so many years. And so here you will find my full interview that I did with Adam of Economic Research. And I highly recommend you subscribe to his channel. He's got a lot of material there already. He runs the channel with his wife as well. And he needs more views, more subscribers, not just because he needs it, but because I think they provide really good information, really good ideas. So without further ado, here's my interview with Economic Research.
Hello and welcome to Economic Research. Today we're in for a real treat because joining us today is Monaco 64, home of alternative economics and contrarian views. So how are you today, Mario?
I'm well, thank you. And you, Adam?
Yeah, I'm very well, thank you. Like I say, I think we're in for a real treat today. So just for the people that may not know anything about you, just tell us a little bit about yourself and your history in the world of financial markets.
Yes, I started out in Switzerland, actually, working for a small private bank, it was called at the time, but I guess it's like a family office, they call it these days. That was in the late 80s. I worked there for about 3 years, and then I got a job offer in London, and I decided to move to London and worked in the city for about 20 years, mainly in the bond markets as a broker. First as a cash broker, which means you trade the real bonds themselves, the government bonds usually. That's what I used to trade, government bonds. So I had to keep track of the economy, interest rates, because that's what affects bonds mostly, government bonds, the economy, interest rates, the GDP, also how inflation's faring. And then I moved into futures and options, but also covering the government bond market. And in 2012, I was made redundant. They shut down the desk that I was working at in the city. The last firm I worked for was called Mint. They had been taken over by BGC, which is Cantor Fitzgerald. And I tried to get back into the city right away. It didn't work out. And then I decided to start my own business. I bought into a pawnbroking franchise because I thought at the time, after the 2008 crisis, that people would need help, that there will be a dearth of credit. But I think I was mistaken because the credit has kept being spewed out in the trillions with the policy of zero interest rates and money printing. So my business, it didn't go that badly, but it didn't go well either. So after a couple of years, I decided to close it down in mid to late 2014. And then eventually I started making my YouTube videos in late 2015. And I thought that I would try to talk to the public pretty much how I used to talk to my clients in the city. And my clients weren't private clients. They were professional, institutional clients, if you want to call it that. So they had a lot more knowledge about markets, finance, and economics. So I thought that trying to talk to the public and explain to them the nature of our fiat currency system and how fragile everything still is was a good idea. And and it's grown and grown. I mean, maybe not as quickly as some other YouTube channels and some other kind of topics, but I'm proud of the fact that we've got almost 60,000 subscribers now, and we've got channels like yours and Luke McCann who are starting to pop up out there, younger people. And yeah, so that's me in a nutshell.
Yeah, well, I think it's absolutely crucial to have channels like yours, because the average person, they don't have a clue how the monetary system actually works. So I think when they realize that the money that we have at the moment is backed by absolutely nothing except from the promises from the government, and well, do you really trust a government promise? It seems ludicrous to me. Especially because they've kept interest rates, like you say, at zero for at least the last decade. And the return that you're going to be getting in government bonds at the moment too is you're losing out in terms of inflation, which, as you well know, is obviously it's suppressed. I think the CPI data for the UK came out today at 3.1%. And come on, it's not 3.1%. Anybody that's gone to a shop can tell you it's not 3.1%. And it's something that I noticed today as well. I look at the producer price index. Their input costs rose by 11.4% year over year. So my thinking on that is, if those costs have gone up for the producers by that amount, how is that not being reflected in the CPI?
Yeah, I actually have a kind of an idea for that. And I think it was Rafi Farber, who you might have heard of. He has the YouTube channel called The Endgame Investor. Actually, the YouTube channel is Rafi Farber. And he mentioned another analyst, and he was saying that a lot of these inputs, the big corporations have been able to hold this increase in inputs back because they're big corporations, but there will come a moment where they won't be able to hold back these input prices, and they're going to have to pass it on to us. And I think that could happen very soon. So that's probably why in our current system where the easy money flows to big corporations more easily than the mom and pop business. And we're seeing the mom and pop business being decimated since last year. So I think that's why, but I think it's not going to be for too much longer. I spoke about the CPI this morning in my video, and I noted that there's another measure of prices. It's called the retail price index, or the RPI. And the government still uses that, but they only use that in order to budget for our taxes. So if the RPI goes up by 5%, they will base the tax increases on that number. But when they have to pay pensions to pensioners, they will base it on the lower CPI. And basically the RPI is always at least 1% higher than the CPI. So yes, that number was a joke this morning. And a lot of the mainstream corporate media, they came out and said, oh, CPI, inflation drops or inflation dipped, but it didn't. It's the rate of increase dropped, but it's still increasing at this bogus 3.1% rate.
Yeah, I mean, I have noticed that too. And I'm thinking with the labor shortage that we have at the moment, and that the big businesses need to pass those costs on. I don't know if you've just seen a news story that's just been posted on CNBC. Amazon in the UK are now going to be paying staff a sign-on fee of £4,000 just to turn up to work. So I'm thinking that inflection point where they're going to have to pass those prices on to us is very, very close indeed. Another inflection point that I think we're very close to is looking at the US 10-year Treasury yield. Because I've noticed that we've been in a sort of descending trend line since about 1980. And I was looking at the top of that is about 1.7%. Last time we tested that back in March, we did bounce straight back off it. So I'm wondering whether this time we're likely to break through that trend line. We're going to have a reversal in that bond bull market we've been in for the last 40 years.
Yes, I've been looking at that for the last few years because I worked in the bond market and I followed that closely. Yeah, the top was in 1981, just below 16%, the 10-year yield, believe it or not. I remember when I started out in the bond market, the 10-year was trading at 6 or 7%. But yes, I also noticed that in 2018, 2017 to 2018, when Powell was trying to normalize policy, he was able to raise interest rates to around 2%. The 10-year yield actually got up to 2.25%. And then the stock market, the bond market, the repo market all started to unravel, and they had to reverse everything. I think now that danger level is going to be around this 175, as you've said. And I've gone back further, and I looked at the 10-year yield going back all the way to the 1920s. And in 1941, I think just before Pearl Harbor, so the start of the war for the Americans, the 10-year yield bottomed somewhere around just below 2%. And from 1941 to 1981, there was a bear market. So bond yields went up from like below 2 all the way to 16%, and prices went down. And I've been wondering if 2021 is going to be the bottom for the bull market we've had since 1981. I mean, if you take a look at 1941 plus 40 years, that's 1981. And then you add 40 years from 1981, that's 2021. Who knows? We could be in the beginnings of a bear market in bonds. So that would mean a lot less credit. All the easy money that we've seen in the world in the last 40 years would reverse. The question would be, will it take another 40 years for us to see this bond bear market evolve, or could we see a very quick unraveling? I mean, that is the question I think a lot of people are not asking, even though there's quite a few people like you and me who are looking at this. And there's still, I think the central bankers, they're still in denial. The Keynesian economists still think that we have somehow a savings glut. The only reason it looks like we have a savings glut is that the central bankers have kept interest rates artificially low. So that's actually inflated the nominal value of all investments. So it looks like there's a savings glut. But if they let the market really set rates in a free fashion, stocks and bond prices would implode and there wouldn't be any more savings glut. So I think this thing about demographics and savings glut is just an excuse to keep inflating. And it's, I don't buy it.
I think what they're trying to do with that media spin is I think they know if they let interest rates rise, the system will collapse in on them. So I think they're just going to use credible threats that they can raise rates to try and keep a lid on everything as much as they can. I think the rise that we're seeing in these bond yields at the moment is being driven purely by inflation, because I've noticed as well that since about June time, the Purchasing Managers Index has been coming down steadily. So that's obviously an indicator for economic growth. So I don't think it's being driven by growth. I think it's being driven by inflation. And the question will be, does it break that 1.7%? My thinking is, will the Federal Reserve come in and just do a huge amount of QE to buy that long end of the yield curve to keep it pinned? Whilst they're seeing the inflation, they're getting more, in theory, in taxes, so they can try and reduce that debt to GDP figure that they must be concerned by that.
Yes, I think that's what they're trying to do. They're trying to fool investors into thinking there's no inflation while letting inflation, real inflation, run pretty wild as it's already doing. And I think they did that in the post-war era, immediate post-war era, where they actually did do something called yield curve control, keeping the 10-year yield below like 2.5%, while inflation was running at 5, 6, 10%. And that did help bring down the debt to GDP ratio. But I think we can't compare where we're now with the post-World War II periods, especially in the US and Europe. Back then, the US had a lot of savings. They had the most gold reserves in the world. They could lend money to Europe as much as they wanted. And Europe, most of Europe was destroyed and had to be rebuilt. But I guess you could argue that they're trying to destroy the economies right now with what they're doing. So maybe that's what they're looking to do. But yeah, I think one of the reasons why professional fund managers and pension fund managers still keep their bond positions is that the central bankers are still pointing, and this policy is called forward guidance. They keep saying, oh, we're going to keep short-term rates low, they're going to go up, but only up to 1 or 2%. And they keep saying that there's a savings glut, that they expect long-term rates to stay subdued. And as you know, bonds, when you buy bonds, even if they have a zero yield, if the price starts going up and the yield becomes negative, the prices will go up even quicker. So all these bond fund managers are doing, and they used to be called fixed income securities, right? They're not managing bonds or fixed income securities in the old sense of the word, where their investors would clip coupons of 4, 5, 6%. No, they're just playing a capital gains game. And that's why it's so important for them to keep this semblance of supposed low inflation so that they can keep bond prices going up. And that's why it's the biggest, probably a bigger bubble than the stock market bubble is the bond bubble, I would say. And like you said, they're going to try really hard to keep rates from accelerating faster. And I think they will use excuses like they did last year with the current crisis to maybe justify even more QE. But the flip side of that is that I think commodities and real things are going to keep going up because there are investors out there. And by that, I don't mean you and me, small fish, but I mean the big whales out there, the hedge fund managers who know what's going on. And they're going to move more and more money into real goods, tangible assets, farmland. We've seen that already happening in the last few years. And yeah, that's why it's so important for them to keep this semblance of low inflation. And that's why they keep using the word transitory. And now I see that over the last 24 hours, there's talk here in the UK of more restrictions because of the health situation. And they could use that in the US as well as an excuse to start QE, even though they've been talking about tapering.
I have also noticed that they're talking about possibly more restrictions coming over the course of this winter. I do find it an odd coincidence how that comes out the day after Johnson meets with Gates, Diamond, and all of the Wall Street bankers. So I just wonder what your thoughts are on that. Do you think they've had a conversation that need to start locking things down again to try and deliberately destroy Western economies?
Yeah, the long-term plan is to destroy in order to build back better, right? And it's amazing how people don't see this, that it's not it's nothing to do with left or right, because Joe Biden has the build back better infrastructure plan. And we saw the Conservative Party, they had their conference a week or two ago. And what was the logo, the logo, or it was Build Back Better as well. So yeah, they want to build a different kind of economy, this green economy, which we're all going to be paying for in more taxes. The people who benefit will be Jamie Dimon, Larry Fink, Schwartzman, Blackstone, and all the other big private equity Wall Street types like Goldman Sachs. I noticed as well that Rishi Sunak has cut taxes for the city of London. It came out this morning. That was probably agreed upon at that dinner at number 10 Downing Street on Monday night. I think they cut there's a financial tax surcharge. They cut it from 8% to 3%. And I also noticed months ago, they had this global minimum tax that they've agreed upon, the OECD or the G20, the major countries of the world. And the UK government has exempted the bankers again, the City of London, from this global minimum tax. So yeah, they're going to keep doing well, and we're going to be paying for it. But it's not going to help the economy, because if you look at the amount of government spending per GDP, we are over 50% now. France, of course, is like at 62%, which is really high. But if you think about it, the bigger government gets, and I think it's going to continue, the less tax receipts they're going to get. Yes, public sector workers pay tax, but if you think logically, they're actually not paying any tax because they get paid by us in the private sector. So the bigger the public sector gets, the less real taxes they're going to get. And the more in debt it's not only the UK, but the US and all the EU countries are going to get. It's really a nightmare, and I don't see a way out.
Yeah, I'm also thinking that the bigger the public sector gets, the less goods and services will be produced, meaning that we will continue to see supply shortages that will obviously drive inflation, because obviously more money chasing fewer goods and services drives the consumer price inflation. And especially because we have the energy source problem that we've got at the moment, because they're pushing this green agenda. Now, there hasn't been anywhere near enough investment in energy. So we started seeing China already that those factories are having to stop production of those goods because they simply haven't got the power. So I'm thinking that the people in charge, they must know that trying to switch to the green energy sources now, when there hasn't been the investment, is going to cause this. So I think it has to be deliberate. And I think we could end up seeing something similar to the Soviet Union inflation, where there was just nothing on the shelves.
Yeah, and it's amazing if you think of what's happening now already to all the challenger energy suppliers. I think we've had 13 collapse already. And this is just the beginning of this green agenda. They haven't even really put it into like effect, and it's already creating all these troubles. Can you imagine when they really try it on, how can I say disastrous, even more disastrous is going to be than it's already now? And I think China will probably get away with it because they have exemptions to keep using coal. And I noticed as well that the Chinese government now have told their coal miners to start increasing coal production. And their targets for net zero, they're a lot further into the future than our targets. So I think China will be okay. I think they're doing this because they know if they don't let China keep producing, that we're going to have almost nothing on the shelves. But I agree with you. It's going to get worse. And I think a lot of these politicians and bureaucrats, they've been kind of brainwashed into thinking that they can tinker with things, and that there's no consequence for human beings, for us, because they look at things more as numbers, the Keynesians. So they might say, oh yeah, it's going to hurt a little bit, the energy situation, but yeah, so they look at it in terms of numbers. They don't look at it in terms of human suffering. And yeah, I think it will be an interesting winter this winter, especially if it's really cold. It's going to be even worse. And a lot of the energy price increases we've seen, that's even before the winter has started. So I agree with you on the Soviet comparison. And that's also a symptom of the currency, because the more they keep printing, the more they keep backstopping. Because I saw today a headline as well, and I haven't seen the story. So, but it looks like Rishi Sunak is talking about extending guaranteed loans for businesses for another 6 months. So that's more deficit spending there, even though we hear, oh, he's really tough on spending. You know, Boris Johnson made a joke, I think yesterday at this investment conference. Oh, I have to ask my chancellor if I can spend this. I think that's just for public consumption. Of course, Rishi Sunak is going to let it rip. They're just trying to calm down bond investors. But I personally don't buy it.
Yeah, I think the problem with these economists and central bankers, if you can call them that, they think that the wealth of an economy is measured by the amount of currency units in circulation, whereas everyone who lives in reality will know that real wealth is measured by the amounts of goods and services that that economy produces. And I also think the amount of regulations that we have is also a huge factor in creating problems. I've got a good example myself, because last year I developed a 2-in-1. It was like a hand sanitizer moisturizer, because obviously you were forced to obviously put it on wherever you went. And Kelly, my missus, she has quite sensitive hands. It used to burn her hands. So I developed that, and the active ingredient in it was isopropanol. And to get that through the regulations, it was going to cost me £50,000, even though they know it's already safe. They told me that if I switched to ethanol, it would only be £2,000. But when I made that switch, I don't know why the formula broke down, but it did. It just made the product completely unviable. So their regulations have now cost me from producing goods and services and possibly employing some people as well, and obviously contributing to that tax base.
Yeah, I mean, yeah, rules and regulations, that's a real chain around the neck or the ankles of the private economy. With this lorry driver or HGV driver shortage, I've seen lorry drivers that have been around for 20, 25 years, saying that when they started out, it only cost them maybe £600 to get a license. And it took, if you had already a driving license, it didn't take that long to get your HGV license. But nowadays you have to take a 6-month course. You have to pay £5,000. And even in the city, even as far back as when I was still there in the early 2010s, 2010, 12, after the '08 crisis, we had all these tests every 6 months about money laundering, about regulations, and it was just it just took us off our job, and we had to do these tests every 6 months. It's just more regulation. The city of London, of course, and I'm not trying to say everything there is great, but it's become more and more of a compliance. They just hire compliance people. I remember when I started back in the 90s, I had to take a course to get my qualifications. At the time, it was called the SFA. Now it's called the FCA. But once you took that test and you passed it, that was it. The experience that you got in the markets after that, that's your qualification. But yeah, everything, these regulations are really bad. I remember when I set up my business, pawnbroking business in 2012, it went pretty well. I started breaking even within 9 months, but I just couldn't hire anyone else to help me. I had to do everything on my own, and that hurt me because uh, didn't get as many customers through the door because sometimes people had to queue up. And I realized that I was paying £10,000 a year almost of business rates. Uh, and that's the council just taxing me for being there. If they had charged me maybe 2,000 a year, which I would have been okay with. Uh, Actually, I would have been okay with zero, but I could have hired someone else part-time. Someone else would have gotten the experience. And that's how you create jobs. I mean, if you look at economies like Germany, the German economy did well in the 50s, 60s, and 70s. They call it the Wirtschaftswunder, the economic miracle in Germany. And a lot of the job creation was small and medium-sized businesses. Big corporations, they don't really create a lot of jobs. They cut jobs because they've got access to the cheap credit from the central banks or the big Wall Street banks, and they can cut labor, and they can increase the machinery or technology that they use to make things more what they call efficient and productive. So yeah, I agree with you completely on the regulatory side of things. You were going to create there with your two-in-one a good product, because I remember as well at the beginning of this crisis, I was concerned. I didn't know what was really going on, and I was washing my hands a lot, and it started getting dry. So if I had something that I could use as well to keep it moist, that would have been good. But after what I did, I just stopped really. I just kept washing my hands as normal as I do normally. I try not to listen to too much to all these signs outside, and yeah.
Definitely not the mainstream media, because they tend to create mass hysteria and fear when it's really not necessary. But on the subject of how the big businesses aren't really affected by those regulations, obviously the United States, they do an awful lot of lobbying to create things the way that they want them to. But I've noticed that a lot of these corporations, they are partners of the World Economic Forum. And obviously Mr. Schwab talks about stakeholder capitalism. So the stakeholders would be those partners of the World Economic Forum. So it looks again like those regulations are designed deliberately to drive those small and medium-sized enterprises out of business. So it centralizes all of the production into the hands of a very few people. That's just the way that I see things. I don't know what your thoughts are on that.
I agree 110% with you. That's the big corporations. They're the ones who actually a lot of people that work for these big corporations, be it in finance, industry, health, a lot of their executives, they go and head up the governmental institutions that are supposed to regulate those businesses, and they do everything to hurt the small businesses. And the big businesses, like I said, they get easy credit, easy financing, and they can afford the big regulatory regime, while the small businesses like you try to do that. £50,000 for you is a lot of money, but for maybe let's say a big company like that company, I forgot, but let's say a company probably got hold of your idea, and they have billions of dollars of resources. 50,000 for them is nothing.
Yeah, exactly. For me, it was just a no-go on that one. completely undoable, and it has driven me out of business. But I'm thinking, what would be the end game here? Do you think that the plan is to make everyone completely reliant on government handouts so they can completely have full total control, then release the central bank digital currencies, whilst obviously they have the huge inflation that I think is inevitable? I know that Lynette Zhang thinks that we're at the opening stages of a hyperinflation.
Yeah, I think the inflation was created already, has been created already. What we're getting now is the beginnings of the price rises. I think hyperinflation is possible. And I think the end game is what the World Economic Forum, and I think it's the Ellen MacArthur Foundation. Ellen MacArthur, she was a Olympian, British Olympian. She won gold medals in sailing or yachting in the Olympics. And she's come up with this idea in 2011 called the circular economy, where there's no waste. So that's the fourth industrial revolution. And to do that, they have to destroy the little businesses like you that you wanted to develop, or mom and pop businesses, so they can control everything. And that's their goal. That's what they're trying to do. Whether they succeed or not is a different question. I don't think they are discounting the hyperinflationary side, and that could be what saves us. And that might sound a little bit contradictory, that hyperinflation or the destruction of the fiat currency could save the public. But if you think about it, if the powers that be, the Mr. Global at the World Economic Forum, if they can't finance this project because all the currencies collapse, how are they going to do it? And that's why I keep telling people to get out of the system. Try to put your savings in something that will maintain its purchasing power in terms of money. And that's usually gold and silver, or even cryptos if you want, even though I think that is a little riskier. But one could also argue that they could be looking for this currency collapse or hyperinflation, because that would give them an excuse to come out with a CBDC. But what would they back the CBDC with? They might be able to come out and say, oh, this is new, it's a CBDC. And people might have a little more confidence in that, because in the hyperinflation, people lose complete confidence. So maybe that's what they're planning, that people will jump into the CBDC. And yes, there will be millions and millions upon millions that will be destitute, and that will need an injection of CBDC, not like the injections that we talk about today, but an injection of liquidity through their digital wallet. So it's possible. It's very hard to say, but and I don't have a crystal ball, but one thing that's for sure, I think, is that I want to be outside the system. And by being outside the system, you don't finance these people. And that's why it's so important, I think, to have a little bit of gold and silver if possible.
Yeah, I'm seeing a few people begin to throw in the towel on gold and silver because they're strangely complaining that the price isn't moving, even though the way that I view it is it's just giving you more time to buy it at cheaper prices, because it does obviously have that 5,000-year history of riding out every single crisis. Now, I don't know whether you've seen any of our Around the World in 88 Crashes series that we do, but one similar theme that goes throughout all of them so far, I think we're 17 or 18 in now, every single time, we always go back to gold and silver, every single time without fail. And that's why I think that it's crucial just to hold the physical gold and silver and don't think of it as something that's going to make you rich. It's insurance. Whereas the way that I see cryptocurrencies is I see them purely as speculation. I don't see them as insurance. Because obviously we're seeing the energy crisis at the moment. My thinking is if we start to see some rolling blackouts, that means that you're not going to be able to get online to get access to your cryptocurrencies. So how many people, the second they are able to log on, are going to panic sell all of their crypto? And that could go to zero very quickly. Hence why I don't think it's really insurance. It's more of a speculation that you can use the profits to buy the real insurance, as I see it, of gold and silver.
Yeah, and cryptos, I think they're near all-time highs right now, and they could go, let's say, to 100,000, but they could very well drop to like 10 or 5,000. And the people who invested on the break of 64 or 65,000, they'll be like, they'll lose a lot of money. And one thing you said there that is really interesting, and I agree with you about gold and silver and the studies you've done of all these 18 crises, I think, in the past, that gold and silver always protect you, and that you can't go poor, really, if you have gold and silver. But and but even if it won't make you rich. When everyone's, let's say, savings or the savings glut is given a huge haircut, and it could be 90%, the whole world be very poor. But those people who have gold and silver, they'll be, in relative terms, they'll look very well off. And I think it's right. Gold and silver, they will act as very good insurance. And I think they will do even very well, because they will act as like a call option when we have a hyperinflation. And normally, when you just have, let's say, run-of-the-mill inflation, which I would say is probably between 3 and 6%, yeah, gold and silver protect you, and it doesn't make you rich. But when you get out of control inflation, I think the people who have gold and silver will be able to acquire a lot of cheap assets. And I don't advise people on what assets to get. That's up to them, what kind of lifestyle they have, what kind of skill sets they have, where they live in the world. If you live in near the desert, you're not going to be buying farmland. If you live somewhere like I don't know, somewhere where there is farmland, you might think about buying farmland. If you live near the sea, you might be able to buy, I don't know, a hotel by the beach, something like that. And that's what I think gold and silver will do eventually. And that's why, yeah, I do follow the markets, the prices, but that's probably because I've been following the markets so close for many years. But it's important that we keep the bigger picture in mind, and that gold and silver are there more as protection and savings, really, in real money.
Yeah, absolutely. And I see some people, when gold and silver have a down day, and obviously the dollar index sort of rises, I've often tried to make the point that the DXY is not an indicator of strength in the dollar. It's an indication of its strength relative to other fiat currencies. So the way that I view the dollar is I view the euro dollar system as the thing that's measured on the DXY. Yeah. And then the local currency is kind of its own thing. I try to split them into two different things, because obviously the purchasing power of the dollar is what you see domestically, whereas that floating exchange, I more call the euro dollar system. And I've noticed China has issued $4 billion of US bonds to try and get those dollars. I think that's linked to Evergrande, because China have told Evergrande, do not default on the US bonds. So I just wonder, if they did, what would be the possible implications on the sort of global economic system?
Well, I think they already defaulted. I think it was in early September on dollar bonds. So I'm not too sure about the dollar issue from China. But one thing I noticed is the dollar has been dropping quite quite sharply, relatively sharply against the yuan recently. But the thing about the dollar index that you talk about as well is the dollar index was set up in 1973 because even though Nixon closed the gold window in 71, in those 2 years from 71 to 73, the major countries try to keep their currencies pegged, even though there is no gold anymore in the system. And they found that that was impossible. And why is it impossible to peg currencies in a fiat currency system? Well, because different governments and different central banks will print or spend more than others. And then the market realizes that you can't peg, let's say, the French franc versus the Deutsche Mark, which were the currencies of France and Germany back then. So what they DXY or dollar index was, because in 1973, these countries decided to go floating rate. They gave up fixing it. So they had to have an index to measure how strongly the dollar and the other fiat currencies were doing. And that's all the dollar index is. And if you go back to 1973, the dollar index started at 100. And where are we now? We're like just below 100, around 93, 94. So it's gone nowhere in like almost 50 years, while gold back then was under $100 and it's now almost 1,800. And the other thing I would say, in the short term, yes, the dollar index does trade inversely to gold and silver sometimes. But if you go back to March 2008, which, and I remember this day really well because it was the day that Bear Stearns had to be salvaged by JP Morgan and the New York Fed. And it was the day that gold traded to a new all-time high of 1,031. That was the rate. I remember it really well. And they announced this bailout of Bear Stearns, and gold topped on that day in 2008. And on that day, the dollar index was also bottom. That was the all-time low in the dollar index at 70.69. And that's the low it's been ever since 2008, 70.69. And here we are now, dollar index at 93 or wherever it is. I don't follow it very closely. And we have gold at 1,800. So that's a sign that all fiat currencies are sinking, not just the dollar, because you would have thought the dollar index going from 70 in 2008 to where we're now, that gold would be at $500 because gold was at 1,000 at the time. So I actually think in the long term, when the dollar index really keels over, and I think it will, because I think it topped in 2017 at 103.82. And from all the cycles analysis that I've done of the dollar index, up legs and down legs in the dollar index last from about 7 to 9 years. And I think we are right in the middle of a down leg in the dollar index that topped in January of 2017. So yeah, dollar index is, like you said, it's a measurement of all the collapsing fiat currencies against each other. And sometimes the pound will drop quicker. Sometimes the dollar will drop quicker, or the euro or the yen. But the bigger picture is that they're all sinking.
Yeah, I'm thinking the dollar index, well, the dollar in particular, is being propped up a little bit by the fact it is global reserve currency. It's created the additional demand for dollars outside of the United States, which obviously artificially strengthens that dollar. Now, we're obviously seeing more and more nations start to move away from that. So I'm thinking we might actually retest that low in the dollar index as we kind of de-dollarize globally. And then that could put the United States in really rather a serious amount of trouble, because that also would mean that the massive trade deficits that they run, they wouldn't be able to get away with that anymore. So then they would have to try and either bring back production, or they're going to have to spend a lot less. Because obviously they've had this huge privilege, well, ever since 1944, really, wasn't it? The Bretton Woods system.
Yeah, that's right. The exorbitant privilege. That's what I think it was Valéry Giscard d'Estaing, who at the time was the finance minister of France, that the United States can print uh, money and buy real goods from foreigners. And it's been a great deal for them. But at the same time, it's put them in a hole right now because, like you said, they've got huge trade deficits, budget deficits. The national debt is getting out of control. So it's going to be very painful. But I would say that for the real economy, it will be a good thing because under the Bretton Woods system or the petrodollar or euro dollar system, if you want to call it, all the other countries in the world, they need dollars. So what do they do? Well, they undercut American businesses. And a lot of times American businesses, big corporations, they go abroad to get the cheap labor so they can make bigger profits. So what that's done is hollowed out the US economy, the manufacturing economy. It's done the same thing has happened here in this country, in the UK. And it's been happening, I would say, probably since World War I here, because we used to have the reserve currency, but World War I really put this country in a financial hole. It bankrupted us. And so, yeah, this is what's happened here as well in the UK. So when I hear Boris Johnson talking about, I think a year or two ago, he said we're going to become the new Singapore. Now he's saying we're going to become the Dubai of hydrogen. He has no clue really how to get this country back up and running. I personally would think that smaller government, less government spending, and sound money would be a good way to start, a good place to start.
Yeah, that's kind of a point we touched on with our interview with Luke last week. To get smaller government, though, I think you're going to need to kick out the current government you've got in charge, because you'll know as well as I do, once a government takes control, it will never give it back. So we need people in there who will actually stand up for the people of the countries, to be honest with you. I think...
Yeah.
I don't know what your thoughts are.
I mean, it's not just the conservative government, it would be a labor government too. And unfortunately, I think it's the mentality of the public. I think that's what needs to change, unfortunately. And maybe if we do have a hyperinflationary collapse, people will wake up and realize that you can't have government running everything. Government is not the solution, because you still hear a lot of people on both sides of the aisle saying, oh, we need the government to do this. We need the government to do that. There's too much of that. I think what we need is the public to wake up and say, we've had the government helping us for 80 or 70 years and nothing's improved. I mean, you hear people commenting now or writing comments. I read articles about the current energy crisis, and people still have this mentality, oh, they should nationalize everything. The government should be running this. But I listened to an interview on Silver Bulletin TV. He interviewed a guy from Lebanon, and Lebanon had a total blackout a couple of weeks ago for 24 hours. And guess who runs the electricity system in Lebanon? It's not private companies, it's the government. So until the general public realizes that the government is the problem, then it will be very tough to get things really shrunk in terms of the size of government. But hopefully, you know, with people like you, like Luke, like me, we will reach more and more people in this country and all around the world. And hopefully instill in them that government is a hindrance, not a help in the economy, for the economy.
Yeah, and to be honest with you, I'm seeing quite a few green shoots. I'm seeing more people that would be considered sort of proponents of government, say about 5 years ago. They're more coming around to our way of thinking, of being a little bit more conservative, with having freer markets and smaller government. So I think there are actually some green shoots on that front. What I would like to ask you is, do you think that the collapse is inevitable, and then on the back of that we have a revolution to kind of get things back to the way they should be?
Yeah, I think what they're hoping to do is that they can keep dragging things on for longer, and keep how can I say, boiling the frog without burning the frog or killing the frog for as long as they can. A collapse would be, of course, burning the frog or the frog jumping out of the pot. I don't know. I think a sudden collapse would be better. It would be very painful, but so would them being able to keep dragging this on for longer and longer, because if they drag it on, it's going to be more financial repression. The standard of living is going to, slowly but surely be cut away. You're going to have less and less standard of living. It's going to be the cost of living keep going up. As for a revolution, I hope not. I hope that the collapse is so sudden and so quick that maybe people wake up. There might be a lot of anger, and I can't really forecast what kind of action people will have or reaction they will have. I think my wife, she was born here in this country. I'm originally from Brazil, but we're seeing things that it's making her worry. She says, I have a bad feeling. I think people are getting angry. They can't take this anymore. And I think she could be right.
Yeah, I would agree. And I think that was also part of the plan, because I remember seeing an interview with Klaus Schwab where he says, we need to prepare for a more angry world. So I think they know what they're doing. And I actually created a table that shows that the system did actually die back in 2008 in that crisis. So that table, it adjusts GDP growth against the amount of government deficit spending. I think we've had 1 year since 2008 where nominal GDP rose more than what the actual budget deficit was. So I think they've been propping this system up for the last 10, 15 years. And I don't know how much longer they can keep going. I think when that yield curve inverted back in September of 2019, we saw that huge repo spike. I think that was kind of one of the final nails in the coffin. So I personally think that we're probably quite close to transitioning from this monetary system into something new, hence why they're pushing the central bank digital currencies so hard. But I don't know how much that would really change it, because at the end of the day, it's still fiat.
Yeah, I personally don't think it would change it that much. I think they would just be buying time there. That's what I think. And it's interesting you did this analysis with the GDP and budget deficits, because I talk a lot about that. I've made a lot of videos about that, because they still include government spending as GDP, which is crazy. So yeah, I remember George Osborne in 2010 when he became chancellor, saying that we'd have a balanced budget by 2015. And here we are in 2022 almost, and we have a double budget deficit. Even under President Trump in 2019, their debt deficit to GDP ratio was almost 5%, and the economy was going around 3%. So actually, if you took out that extra 5% there, they were having negative 2% in real terms. And people still have the gall to say that that was the greatest economy ever. I don't understand that. And that's why I tell people, you can't look at it in terms of left and right. Both sides of the aisle are playing the same game.
Yeah, and it just shows that we've basically been in one huge recession. Well, arguably you could say it was a depression, really, since 2008. That's the way that I see things. So that's my thinking of how much longer have we got to go. But
Yeah, I remember back in 08, 09, and I remember when they saved the system. I think there was that vote in the US Congress just after Lehman collapsed, and it didn't pass in Congress, and the stock market dropped massively. I think it dropped 777 points. And then they were threatened, Congress was threatened. They said, if you don't save Wall Street and bail us out, there's going to be martial law. And then that, I think it was, I forgot what the name of the plan was. Was it TARP? And then it went through. And I remember talking to friends at work. I said, well, we're going to be paying this for years to come. And eventually people are going to be very angry about all this. And I think we are there now. And isn't it interesting that now that we are in the period where people are waking up and getting angry about how they've been swindled, that we have all these new rules and regulations about being in your home or not being able to travel. It seems to me that it's a convenient coincidence.
yeah, I was thinking exactly the same thing. It's oddly convenient that they had a major crisis right when the financial system needed a crisis to give them an excuse to do huge amounts of quantitative easing and basically prop everything up. Because like I said, that repo market spiked at what, 12% in September of 2019. And you also had that yield curve invert too. So yeah, that crisis.
Yeah, I remember the yield curve inversion started early 2019 or towards September. And I made a few videos saying that usually that was a sign, inversion of the yield curve points to a recession. And a lot of people in the mainstream media were saying, oh, no, not this time. It's not going to happen this time. And lo and behold, it did.
Yeah, with the mainstream media, it's always different this time, isn't it? With everything. It's like the narrative at the moment is we can 100% get away with printing trillions of dollars, and it's not going to cause inflation this time. We're smarter this time with modern monetary theory. But I saw Biden when he unveiled that $3.5 trillion his infrastructure program, wasn't it? He said $3.5 trillion equals zero, which made absolutely no sense at all. So I'm thinking if that's supposed to be the leader of the free world coming out with that nonsense, then wow, we're in trouble.
Yeah, maybe he meant it in real money.
Well, yeah, I suppose that's true.
Yeah.
So do you see any possible solutions out of this, or do you think it's just something we're going to have to go through?
No, I don't think so. I don't think there are solutions. Once the Austrian school, they say once you get into that path of inflation, I guess early on you can try to get off the road. You can do a U-turn and come back, but I think we're way too far gone into that path of inflation. The solution, unfortunately, for the economy and society as a whole is not going to be good. It will mean just more, it will be more and more like a third world country. And this is not just the UK, but Europe, the US, Canada, Australia, New Zealand. But it doesn't mean that you as an individual can't benefit and still thrive on, under such conditions. And I think that's why it's important to know what's going on and to know that we are under such a big crisis, in my opinion, so that you do the right thing. And as I've said many times, I'm not here to tell you what to do, because everyone's circumstances are different. I'm just trying to see what's going on and maybe help people understand a little better what's going on in terms of the economy, so that they can maybe not listen to the wrong kind of advice, especially from government. Never accept help from the government, because they will always want something back. Always try to be as self-reliant as possible and not depend on governments for your livelihood. And I think you'll be okay.
Yeah, and basically become your own central bank. And I do find it funny how the biggest inflows on record of central bank gold buying were 2018 and 2019. And they keep coming out and saying that it's a worthless rock.
Yeah.
So it's the point that I make: do what they do, not what they say.
I agree.
But I think that's pretty much everything that I've got to go through today. So unless you've got any final comments that you want to make.
Not really. I think I've said all that needs to be said for now.
Perfect. And just for some people who may not have come across your channel before, just tell them where they can find you.
Well, on YouTube, Monaco64. And I also post stuff on Twitter. I post my videos on Facebook and other platforms like Odyssey, Rumble, DTube, Steemit, and Hive.
Yeah, perfect. So in that case, Mario, I do appreciate it very much for you joining me today, and I hope to speak soon.
Me too, and I appreciate your invitation, and I really enjoyed speaking with you, Adam.
Yeah, and me too, Mario. Hope to do this again soon.
Yeah.